high yield market never confirmed the panic that we were seeing from the economists about the economy. High yield spreads did widen to like 439 basis points wide, but if we were barreling into a recession, they'd get to 700 or so, and they're back down to like 360. The second is that the stock market did have a liquidation event, as you point out, but waterfall declines, all of them, 17 out of 18 since 1950, had a V-shaped recovery. So we knew that whenever the bottom was established, the bottom would be a V-shape. 2022 was the only real exception because of Jackson Hole. And the third is we had a lot of faith in businesses. You know, these companies have been battle tested. They survived a pandemic shutdown. They survived a bullwhip effect from a recovery. They survived the fastest rate hikes in history. So I think that businesses really should get credit, and they've delivered earnings even for Q1 and for guidance that have been way better given the Armageddon that we expected. So I think those three things are the reasons we sort of told our clients to kind of buckle down and even add exposure.
Just when it seemed like the financial markets were completely losing control, boom. A 90-day pause on tariffs between the United States and China sent ripples across Wall Street. The S&P 500 shot up by more than 3% in a single day, one of its biggest jumps all year, after the leaders of both countries decided to take a break from increasing taxes on goods and even lowered some quite significantly, from a hefty 145% down to just 30% on a wide variety of imports. It was like a sudden sigh of relief after a really tense standoff. But was that enough to change things for good? Well, one expert wasn't at all surprised. Tom Lee of Fundstrat. While everyone else was panicking, with scary news headlines about retirees losing everything and traders rushing to sell, Tom Lee kept a steady head. He advised his clients to stay strong, pointing to solid company profits, healthy lending, and how the market has historically bounced back sharply after big drops. And guess what? He was right. Once again, Lee's prediction for the S&P 500 in 2025 is still a confident 6,600, which is still about 15% higher than where we are right now. His confidence isn't just based on a good feeling, it comes from looking at the core strengths of these companies. He believes that the businesses that have managed to survive the tough times of the pandemic, rising interest rates, and global political chaos won't just scrape by. They'll actually do really well. And here's the exciting part. You haven't missed out on a potential opportunity. Lots of really strong stocks got hammered during the market panic and haven't fully recovered their value. As these tariff worries decrease and things become clearer, some of these companies that are currently undervalued could end up being the biggest winners. So in this video, we're going to take a close look at 3 of these kinds of stocks. Companies with strong foundations, real potential for growth, and the chance to really take off as the market recovers after these tariff issues. Let's start with a stock that seems perfectly positioned for this moment, Celestica Inc., with the stock symbol CLS. While everyone on Wall Street has been chasing after the trendy new artificial intelligence companies, Celestica has been quietly establishing itself as a crucial part of the infrastructure that makes AI even possible. And now, after the US-China tariff break and the big surge in the S&P 500, this stock could be one of the biggest beneficiaries as the market settles down and investors start putting money back into these overlooked growth stories. Celestica just announced another fantastic financial quarter. Their income jumped by 20% compared to last year, and their earnings per share soared from 86 cents to $1.20, easily beating what analysts were expecting. But this isn't just a one-time stroke of luck. The company has now had 5 straight quarters of strong double-digit growth, all thanks to the huge demand for the data center equipment that's essential for AI. And with major tech companies like Amazon, Microsoft, Google, and Meta all investing massive amounts in AI and cloud computing infrastructure, Celestica's order books are likely just getting started. What makes Celestica even more interesting is their strategic shift towards their higher growth areas of connectivity and cloud solutions, which now make up a larger portion of their income and bring in better profits. They're not just growing, they're growing in a more profitable way. And with very little debt, less than 10% of their total market value, Celestica has the financial strength to invest more, expand their operations, and keep coming up with new innovations. Wall Street is starting to pay attention. Some analysts now predict the stock could go up by as much as 38% from its current price, with a target price of $133. and that's based on fairly cautious estimates for growth. With the demand for AI infrastructure only increasing and global economic tensions easing, this stock could be riding the next big wave. So, if you happen to miss out on companies like Nvidia or Supermicro early on, Celestica might just be your second chance, a powerful company that's been quietly building momentum. Real quick before we move on, if this is hitting the mark for you, drop a like and hit subscribe. It really supports my small channel. And hey, if you're thinking about retirement or just serious about smarter investing ideas, check out the links down in the description. I have a free gold IRA guide for investors looking for stability and diversification in their retirement portfolio, and a premium investing newsletter you can try for 30 days, packed with market insights, stock ideas, and smart investing strategies you won't find anywhere else. Check them out. They might just change how you grow your wealth. And now on to our second company to watch, Arista Networks Inc. with the ticker symbol ANET. Think of them as a silent powerhouse that's literally wiring the future of artificial intelligence. While most investors are focused on the companies that make the computer chips themselves, Arista is building the super-fast, low-delay networking systems that allow these massive AI systems and huge data centers to actually function. In the first 3 months of 2025, Arista reported a strong 27.6% growth in revenue compared to the previous year, hitting a record-breaking $2 billion in sales for just that quarter. Their earnings per share also jumped to 65 cents, exceeding what Wall Street analysts were expecting. And importantly, it looks like their strong performance is set to continue. Arista isn't just keeping pace with the rapid growth of artificial intelligence, they're actually enabling it. Their CEO, Jayshree Ullal, has emphasized Arista's unique position in the AI networking world, especially with their Etherlink product line, which solves the real-world challenges of connecting tens of thousands of powerful processors efficiently. With their cutting-edge network designs, Arista's systems are becoming the standard choice for the massive data centers that are deploying huge numbers of AI processors. Their role is absolutely critical. Their advantage comes from their deeply integrated software, their unmatched hardware performance, and their loyal customer base. But here's where it gets really interesting. Arista is also aggressively expanding into regular business campuses and government markets, recently taking business away from older, more established companies and winning significant deals. Their revenue related to AI is on track to reach $750 million in 2025, and in the longer term, they're aiming to exceed $10 billion in annual revenue ahead of schedule. With a massive $8.15 billion in cash reserves, a new $1.5 billion program to buy back their own stock, and no debt at all, Arista is a rare combination of rapid growth and a really solid financial foundation. And thanks to the recent pause in US-China tariffs, the pressure on their supply chain is easing, which could position Arista for an even stronger second half of the year. So, if you believe in the future of AI, Arista isn't just a side player. They're a fundamental part of the entire infrastructure. Fun fact, Arista Networks was founded by some of the same brilliant minds who also started Cisco Systems, a giant in the networking industry. Finally, rounding out our list is a major player in the cybersecurity world that's quietly becoming a giant in protecting systems using artificial intelligence. CrowdStrike Holdings Inc. with the stock symbol CRWD. While some investors might hesitate because of its relatively high stock price, CrowdStrike is building something that could make it one of the most important technology companies of this decade. In a world where everything is becoming digital, our data, our infrastructure, even warfare, cybersecurity is no longer just an option, it's absolutely essential. CrowdStrike's Falcon platform is uniquely designed as a flexible cloud-based solution that uses AI to detect and prevent threats, making it a crucial tool for both large corporations and governments. And the numbers speak for themselves. In their most recent annual report, CrowdStrike's revenue grew by a strong 29% compared to the previous year, reaching $3.95 billion, with their subscription revenue growing even faster at 31%. The company now boasts $4.24 billion in recurring annual revenue, an impressive 80% gross profit margin, and over $1 billion in free cash flow. That's not just strong financial health, it's like having a financial fortress. Looking ahead, the company expects its revenue in the next fiscal year to reach up to $4.8 billion, with their operating profit margins climbing as high as 20.5%. This is a clear sign that their recent efforts to streamline their workforce by 5% and adopt more AI are making the business more efficient, faster, and more profitable. And here's where it gets really exciting. The market for AI-powered cybersecurity is projected to hit a massive $250 billion by 2029. CrowdStrike currently holds just a small slice of that market, which means there's a huge potential for growth, even if they don't gain any additional market share. Yes, their stock might seem expensive right now, but companies with a clear vision and a strong product often do. With strong fundamentals, a massive potential market, and a product that's only becoming more vital, CrowdStrike isn't just a bet on cybersecurity, it's a bet on the future of trust in a world increasingly powered by AI. For investors who are thinking long-term, this might be one of those rare stocks that looks pricey today but could seem like a bargain in the years to come.